sufficiently enough to cater for our raw material imports, as well as, a lot of workers now are being paid part of their salaries in dollars, but we haven't reached that stage where we can do a lot of those payments. But we are hoping that with increased focus, we will be able to increase our US dollar revenues.
But isn't this putting Australia in your bottom line in the sense that you're having to use Zimbabwe dollars, as you said just now, use Zimbabwe dollars as an exchange rate to import products to keep the business going, so to speak, the printing press, the newsprint, and so forth. But you're then selling it in Zim dollars. The exchange rate is moving. So as a result, you may actually at some point be selling at a loss if you use the official rate. I mean, isn't that a worry? Because a lot of the market already has started shifting to pricing at the parallel market rate. Now, I know that Zimpapers doesn't do that because we've spoken about that, but that is becoming a concern. Even listed companies are now pricing at the parallel market rate. What is your comment to that?
Well, we are a public company, and we believe that we need to be upholding the law and pushing for the correct thing as a media house. However, the reality is that parallel market pricing is there. You can't run away from it. Our people are paid in RTGS, but they pay their rentals in US dollars, and so you can't run away from that reality. So we have to do our best to make sure that the RTGS dollars that we are earning are able to cover our cost. We have tried to adjust our the price of our newspaper cover prices. For instance, a typical example is you get a subscriber who comes out in January, pays you for the rest of the 12 months in RTGS. By the end of the first quarter, but the next month, the value of that money has really been eroded because you still have to retool, you still have to import raw materials and so on. So keeping pace with the exchange rate has become really a headache for businesses like ours, because we also see that there's a lot of migration that is taking place from reading content on the newspaper to reading digitally. With that migration means you are losing subscribers. So to keep those subscribers, you can't be pushing your cover prices up every month. Because what becomes important for us is the mass market. That is, many people as possible are reading our content in the newspapers, which is what advertisers follow. So for us, the balance is, do you maintain your readers in print so that advertisers also can find value in the eyeballs that they get in print? Or do you simply hike up your prices and lose readers who are already migrating to digital platforms? So for us, really, it's a delicate balance, and we would minimize as much as possible hiking those print cover prices.
I will later on in the interview talk to you about the way forward when it comes out and some of the plans for Zimpapers. But before we get there, profit after tax, 96.5 million, 2022 from 333 million in 2021. I mean, that's of course 71% in inflation-adjusted terms. I mean, looking at those numbers, that would imply, just as a simplistic comment, profitability down. I mean, when you look at the results of other companies, profitability is up. What is are you concerned about profitability and the level of profitability the company is making?
We are worried because that's what drives our shareholders to be invested in us, and our profit trajectory has always been very positive. However, the factors that are influencing that profitability, like we said, the movement in the exchange rate, the cost of labor, and so on, have been hitting our bottom line in quite a big way. So sometimes, what do you value? Is it your people or is it profitability? So sometimes then you have to sacrifice the quantum of profitability so that your people are taken care of. And also you have to stay in business, which means you can't ignore the fact that you have to bring in this newsprint, lots of it, to make sure that our readers have access to the newspapers, and then grow your other revenue lines that are not so dependent on such raw materials being imported, like your radio, for instance. And then, of course, commercial printing, once you get paid in dollars, you are able to manage those costs and your profitability should be decent. However, the elephant in the room is the cost of imports and the cost of labor in this inflationary environment.
One area that hit me was what I would call the net monetary loss figures. I mean, you have 940 net monetary loss. You've got property revaluation net of 5.4 billion Zimbabwe dollars, which catapulted the group's total comprehensive income of the year to 5.5 billion. But I'm not really wanting to look at the numbers. I'm more looking at it from a shareholder's perspective. When you look at all of these net monetary losses, you look at the revaluation amounts. I mean, a shareholder will say, where is the core value in Zimpapers? What should I be looking at? What is the real value of the firm?
This is core products. As you noted earlier on, Zimpapers or some of the super brands in our economy. Our newspapers are tried and tested. They still make money in an environment where newspapers are shutting down elsewhere in the world. But we have stayed the course. Vision. We have invested quite a bit of money in TV. We are still at that developmental stage, but we see a lot of potential in terms of viewership, in terms of advertising appetite on those platforms. And when you look throughout the world, television makes money. Newspapers probably are stagnant and declining, but we are seeing possibility of revenue growth from TV. And radio, of course, is stable because radio has a far bigger audience reach than any other medium. So there is a great potential to grow. And traditionally, people would pick up a newspaper because they were part of the middle class. That sort of formula has changed, where a lot of people are now in informal economy. But we see hope that they will begin to come back to platforms of their choice. Now we've understood where they read their content from, that they will not be like our fathers who would want to be seen with a newspaper in his pocket, but they'll be reading it from their tablets. So we are going to see growth coming from those areas. And we are seeing audiences growth there, and we are seeing an appetite also growing for advertisers on those digital platforms.
Now it's time for us to take a breather. Of course, we're going to start drilling down more into the different business or divisions at Zimpapers. I'm talking to the group CEO of Zimpapers, PD Deketeke. Don't go away. The Mint will be right back with this interesting discussion.
Somebody. Life, just as we all know it, is full of emotions. Akuna gonna game one where in 90 minutes you can be able to fully express yourself like football. Chance, it is a goal! What I saw, I was spectacular. If our favorite player scores, hi, congratulations! But if they miss, if the referee makes a very bad decision, we are so disheartened. If our team loses, I could go on and on and on and on. But simply put, football is 90 minutes of pure emotion.
Let your emotions run wild with the Castle of the Premier Soccer League. Bora Redu, live on ZTN Prime.
Welcome back. You're watching The Mint. I'm Andy Hodges, and this is ZTN Prime, broadcasting to you from Harare, Zimbabwe. I continue my discussion with the Group Chief Executive Officer of Zimbabwe Newspapers 1980 Limited. That, of course, is Pikarai Deketeke, or PD. PD, let's break this down. I know we spoke about this in general in the first segment. Let's break it down. Newspapers division increased its top line by 59% in inflation-adjusted terms. And according to results, and I quote, cost optimization remained critical in ensuring its survival and improving the profit margin of the division. So, I mean, you know, you talked about this. There are some fixed costs. You're importing of your newspaper print, depending on your circulation numbers. And we've got a hyperinflationary environment, or we did. Obviously, inflation biting into that, exchange rate biting into that. I mean, cost optimization is difficult in such an environment. How are you managing that?
Well, it's tough. It's establishing your efficiencies. We are a business that is spread across the country. where we used to say send a car that would take a reporter from the Herald, another car that would take a reporter from the Sunday Mail to cover a soccer match. And now we're putting our people together to say, you know, cost of fuel. How are we transporting our newspapers across the country when probably circulation is coming off, using other means to do so. So we've been looking at really opportunities where we can cut down on those costs. What are we spending on? You know, journalism is an expensive business. Printing newspapers, gathering the news. This is why, you know, guys who just do it online from their homes and attract audiences don't carry that cost. We do. So we invest in our journalism, but that investment also has to be looked at in terms of what returns are coming back. How much money are we putting in it? Can we do it better? Now, instead of having journalists at different newsrooms, our reporters will now report across platforms. If one reporter goes out to do a story, he'll do it for digital, he'll also do it for radio, he'll do it also for the newspaper for the next day. Now you've cut your cost and probably 3 or 4 people are supposed to be doing that same job. We have centralized our subbing. Instead of having sub-editors aligned to each publication, now we have a content factory where all newspapers are edited in one space, and we are establishing efficiencies in that regard. So there are opportunities, and I think it's what every publisher throughout the world is looking at. How do we bring down those costs, or how do you maintain them at the same levels where revenues probably are not shooting up?
And I mean, you talked about something which is critical, not for the reader in particular, or the viewer, depending, or listener, depending on what division you're talking about. That's content creation. In other words, supplying them with relevant, interesting, good, well-written, well-researched content. I mean, which is down to your staff, I assume, down to the levels of staffing in it. And we have, I know, when I say we, because I'm part of ZTN and Zimpapers, we do have award-winning journalists here. I mean, talk to me about that content creation, how important it is to maintain that high standard and level of content creation amongst the network.
The biggest thing that we are selling is trust in an environment where there is content everywhere. Like I said, people are producing content from their bedrooms and calling them stories and so on. But people come back to us to check, is it correct? So the awards throughout the year, whether they are print awards, sports awards, business awards, because of the quality of journalism that is coming out of our platforms. And subsequently, our platforms like the Herald and Star FM also winning the Super Brand Awards. And when you look at ZAMS, again, when you follow what readers are looking for, you find there has been growth on all our platforms in terms of readers. So it's the quality of our content, the research that goes in there, and the relevance of that content.
Zimbabwean market, in the sense that how can you then continue to grow your market penetration in the market, because it's been pretty stagnant, particularly in terms of the print media side. Of course, TV still is growing, so there's a huge potential there. And of course, one of the issues was subscription-based digital offerings rather than free, because right now you can pretty much go online and read the Herald free, which in essence means that you're not making any revenue from that and advertise using the print. Maybe some comments on those issues.
Yeah, maybe starting with the last one. I'm just coming out of Blawayo where we're meeting with our consultants. There's a firm called PD House.
No relation.
No relationship whatsoever. It's performing up among many others. Because of the thrust that is being put into digital, what does the future portend? What does Zimpapers offer to its worldwide audiences? We have a lot of diasporians who are really accessing our content from outside the country. How do they make a contribution? Can we put some content behind paywalls that people begin to pay for as reader revenue? And these are things that we are exploring. What else can we do on those platforms so that it is paid for? What would readers pay for as opposed to general news? So we are worried about that, and we are doing something about it. But also, like I said earlier on, Zimbabwe's economy is highly informalized. But you find the housing developments, communities that are growing, brick and tile properties being built. Who is employing those people? They are spending money on building houses, buying cars, and so on. But are their reading traditions the same? How do we ensure that we reach those audiences to make sure that they consume our products, they pay for what they read, and we produce the kind of content that they are prepared to pay for? I think it's a puzzle that we have to find, and we're sending our people to do research, talk to those communities that are emerging throughout the country, where you are seeing these new developments taking place. Who are they? Who are these guys? Where does their money come from? Yeah, what channels do they like to use? What are they watching on television? Are we relevant to them? So once we have that cornered, I think it also applies to the economy, to the taxes that are not being paid, but the money being spent in the economy. So we are all in that same boat. The traditional way of doing business that we knew and understood 20, 30 years ago, that model has totally changed. And a new financial model has come in place, and we have to be able to identify those small players. I mean, we used to go shopping to Babas, Greater Men's.
Yeah.
Now it's little cubicles that have emerged. Who are those people? Where is their money coming from? Where is it going? And those are the people who are beginning to chase. What are their reading traditions, or do they have any? How do we connect with them?
So we're talking now about the strategy of seeing that how can we move from this traditional market that used to be in the media to the future, or now in the future, and how does Zimpapers leverage on those issues?
Exactly. The future is now.
I want commercial printing division, and that print I think is one of the areas. You spoke about earlier, printing beer labels and so forth. I mean, traditionally, if you think of media house, you would think of the Herald, maybe now ZTN and so forth. But it seems that is really contributing quite a large portion to the bottom line. And yet, someone could stand up and say that isn't traditional media. That isn't really a media house, even though sure it's media. I mean, what would you say to such criticism?
You know how it all started. Most media companies throughout the world own commercial printing presses. They bought these huge commercial printing presses, printing books, because it's a revenue line that is quite strong. And Zimpapers is a diversified business operation. So where there are opportunities to make money for our shareholders, this is why we're on the stock exchange. We have to chase those opportunities. And we see a lot of opportunities in commercial printing. We see growth in beer labels and other formats of printing that are coming into the market. Our people are always researching on paper, on quality of that paper. What is it that the brands that are coming into the market require? So that business, we are not about to let it go. We believe it is it's making money.
You might as well not
and it has been with us for ages.
In fact, that's the go-to division for people who want good printing. I mean, you name
Absolutely.
it. OK Grand Challenge, which we covered yesterday here on ZTN. They also are printing that. OK Zimbabwe. So I want to move to ZTN. Obviously, it launched last year in May. On DSTV channel 294. How has the market received the new?
Is issue around accessibility. People have to go onto the DSTV platform, and there are technical issues that are also hindering accessibility of ZTN because of where it is at 294. However, despite those technical challenges, the growth in the viewership for ZTN is very encouraging indeed. You see also there's growth in terms of advertising, which means the more people are watching, and companies are seeing a lot of hope. We do sport, we do PSL. We have got that deal with PSL to do the games, and people are following that. So there is a lot of creativity that is coming out of the ZTN offering in terms of its programming and catering across all things. Because we are one channel, so we have to do sport, we have to do lifestyle, we have to do dramas, we have to do news.
Just 24-hour channel.
24-hour channel, and we have to provide almost everything to our viewers so that they stay online. And we are happy with the numbers so far. We are happy with the response that is coming from advertisers as they get to know the channel. And to expect that in its first year of operation for a television channel, it will be able to make super profits. No, it will not happen now. But we are seeing gradual growth coming in. And we have been having the multi-choice team come in, very excited about our product offering, and some of the most surprising products like the chase, political conversations there that Zimbabweans have been wanting, products like Village Court, where you see peasants going to a chief before chief, and having conversations around issues that matter to them. And now you're getting the village in people's lounges, talking about, people's
daily
lives and so on. So that gives us a lot of comfort that we're able to talk to all Zimbabweans in all their spheres, whether they're in the village or whether they're on the mint, talking finance.
No, I just have two questions that we haven't running out of time, but two quite interesting questions. First, I want to talk about staff. You talked about this very briefly, staff retention and welfare, and I know every time I do get you here, I always like to ask you about your staff, because obviously the Herald staff, I mean, I work here, seem very dedicated. They're committed to the station. Maybe just a quick word about the staff and how you think about them and their welfare. I think it's important.
It's a constant question that we worry about. Whereas other companies who are trading in purely US dollars can give their workers salaries in dollars or a portion of those salaries in dollars, we can't, because we have to worry about bringing the raw materials and ensure that the business is viable. But we do constant salary reviews to make sure that at least they have a living wage. And we could do much better if our revenues were growing. So we have to balance between trying to give a return to the shareholder, trying to invest in the business in an environment where the cost of money is so expensive. And if you're not generating enough dollars to finance our capital needs, then the money has to come from borrowing. So you have to finance those huge interest costs in an environment which is also very inflationary. So it becomes really a quandary. How do you balance all those factors? Borrowing money, increasing salaries of employees.
You want a Zim dollar base in terms of revenue.
So that's our biggest challenge. And we can't overprice our products because they're mass market products where people have to consume them and be able to afford to buy a newspaper, for instance.
Sticky price problem as well.
Yeah. But I'm hoping that as the economy improves and also as our US dollar earnings improve, we should be able then to make sure that our staff are getting a proper living wage.
One final question, PD, and it's an interesting question that I got from one of the analysts. They said, look, I don't understand Zimpapers. Why? Because on the stock market, they're valued at 20% of their real value. Why not look at chopping up some of the divisions and relist them? For example, ZTN listing as a separate entity, even looking at going and listing in regional stock markets like Botswana and so forth. Is this something that you could look at future? I'm not saying it's obviously a plan now. Is that a plan to see how do you unlock value which is locked here at the Zimbabwe Stock Exchange? And at the moment, unfortunately, Zimpapers is undervalued.
Yeah, I mean, delisting, not necessarily delisting, listing some of the divisions as businesses on their own, I think is an attractive proposition. Probably one that we need to talk about going into the future. To see how much value have we brought into the broadcasting division. When you look at TV and radio put together, is that a proposition? When you look at commercial printing division, not printed typocrafters put together, would that make sense? Would that attract new money into the business? Can it allow us to recapitalize the business? So we'll be having those conversations, but what we think is critical now is to stabilize the business so that at the time when we then have to demerge some of the business units, they are strong enough on their own to attract investment on their own.
Vikaratekateke, Group CEO of Zimpapers. Thank you, sir, for appearing on the Mint.
Thank you for having me.
Well, that's it for today's episode of The Mint. Of course, you can contact us via our social media platforms, Zimpapers TV Network, or on Twitter at ZTM Prime. I, of course, as usual, will see you tomorrow morning, bright and early, 6 a.m., for the only show that you should wake up to. That's Morning Rush. I'm Andy Hodges. Goodbye, and please, you all be safe.
Wish I didn't wake up, 'cause 'cause now I gotta find her in reality, yeah. She's the one with who I share everything. You know it's kinda messed up, 'cause now I gotta find her in reality, yeah. Where to search, where to go, where to turn, yeah. Met the girl of my dreams in my dream. Wish I didn't wake up, 'cause now I got, kinda hurts when I think about it. God knows I love the way she made me feel. I was flying, now for her touch I'm crying. In my dream she was so close, but right now she is so far away. Met the girl of my dreams in my dream. Wish I didn't wake up, 'cause now I gotta find her in reality, yeah. She's the one with who I share everything. You know it's kinda messed up, 'cause now I gotta find her in reality, yeah. I say, come on home, baby. Come on home, baby. Baby girl, I need ya. Yes, you know I need ya. Come on home, baby. Come on home, baby. Baby girl, I need ya. Yes, you know I need ya. Met the girl of my dreams in my dream. Wish I didn't wake up, 'cause now I gotta find her in reality, yeah. She's the one with who I share everything. You know it's kinda messed up, 'cause now I gotta find her in reality, yeah. Met the girl of my dreams in my dream. Wish I didn't wake up, 'cause now I gotta find her in reality, yeah. She's the one with who I share everything. You know it's kind of
Jen, yeah. In the row and a guilt. I was texting Amanda like you wish I come Timborova Matilda. Pand up for no one Matilda. She heard I'm leading the youth, she came, she did. Then I said the sentence I killed her. I told her she wasn't nothing. Nagamboti, she's a muffin. Muffin Rajkiva, Muffin Rapera, Zango Jeho, Zaji Bake. She said, Oli, do you love me? I said, Wang, Zazir Patena. I told her no. I told her you gotta go. Me and my fellow brothers are abusing a girl child. We know if she's on the booze, then she's gonna act wild. Wow. So it's 4 for 4. 4 for 4. 4 for 4. You know it's 4 for 4. You know it's 4 for 4. Plan the wrong body knows the Tangana 9 a day in advance. Cinemas vote just Sarah Kuchaga, my pines were paying in rands. Boys rem group rikunetsa kufura rikutaura kuti tsvaga yemachicks. Boys rem group arichada zvidhura rikutaura kuti kandai mapics first ichi